Hi everybody, welcome to another update on the gold forecast index, the holy grail to predicting gold prices. In my last video I said gold was going to go up, it was the time to buy, and it has gone up $60. Not bad. What is gold going to do this month? Looks like it's just going higher and higher. So let's take a look at the new data point of the gold forecast index, and it's a pretty big spike for this month. Really big spike up from here to here. So you would think that gold would be going higher, right? Because this looks like the same that we have in 2008, a dip and then going up, and here a dip and going up. So we should be somewhere here. Yeah, you can see it. If I do this, you can't see it, but gold should go 50% higher. Okay, that's the green thing here, and this should go like this based on this chart. But of course, there is some part of this spike that's due to the tariffs. So they are importing more in advance of the looming tariffs. So a lot of gold has been imported and other goods. So that's why we see this import spike. So probably this is going to go down back for the next month. So I wouldn't be too bullish on gold, but this looks good. Taylor roll rate going up, that's good. Unemployment rate will go up. I do see some deflation, disinflation right now. So this is probably going to be a little bit flat. The misery index, real output, yeah, going in the right direction for gold. Don't have new data here yet, but it looks like it's starting to rise for the gold ETFs. GLD is still in this head and shoulders pattern, so let's see if this can break out. If it breaks out, then gold will go up. Yeah, we have had a lot of COMEX posts here. It's making a new high. That's all the gold that's now going into America from Switzerland. These are the deliveries. It's spiking. LBMA is getting depleted. Still needs new data on this one. Latest China gold demand was not that good. You can see the trend is dropping. Yeah, you can't keep on buying that much gold because the price is up, so it's coming down a bit. Okay, silver demand is, and ETFs are actually dropping here. So I'm not that bullish on silver. I'm more bullish on gold. SLV is dropping. PSLV not really rising. So only Twitter has a lot of bulls, but retail is not actually buying. Shanghai futures. Yeah, I think it went back down. This was not updated. What's this? Yeah, this is probably up. That's the COMEX silver inventory. Okay. China has bought some gold. Next week we will have the numbers for February. Let's see what they are buying. And you can clearly see that they are buying more and more gold, 4.6%. I think they are actually starting to move away from these foreign reserves and treasuries more into gold and commodities. That's a new trend. Premiums are actually doing nothing, so retail is still not buying. You see the premium still very low on junk silver. Then on to the Shanghai gold premiums. I want to increase this chart a bit because it's important to understand this. So this is the premium. The blue line is the premium and the red line is gold. So you can see if the premium goes negative, then you get a spike in gold. If the premium is positive, then you have a bottom in gold and a dip in gold. So this was clearly a buying opportunity, and I have said every day that gold is going to go up. So and it has gone up. Now it's back to 0 here, and then it went negative, and you can see then we had a spike until here. Luckily, the premium went back positive, while we had a tiny dip here. This was a buying point, and then gold goes to 2,800. It's still above 0, as you can see here, so it's still in a bullish momentum. And today we have a tiny bit of rise in the premium, even with a higher gold price. So I do expect gold to hit 3,000 at some point when you look at this chart. Okay, so that's the Shanghai gold premium chart. It's very useful. Same with silver. It's actually not looking that bad, this premium. I think it's about 5-6% right now, somewhere here. And if this goes down, then silver can go up to 35. It follows gold. So UpMax premiums have gone up a bit, 4%. So not 2% anymore. So that's an improvement. COT report, I think open interest has gone down a bit. So this is not updated, but it was down a bit. So I think we are refueling now to get to a new high. So open interest looking good. Okay, so this is still bottoming out, so that's also looking good. Real yields are not up yet. You could see this as a bearish sign, but if it turns up, then it could be bullish. So if we get some rate cuts, and I do think we will get some rate cuts. We're in March now, so still a bit of seasonality decline, but we are starting to bottom out for gold. So April would be a buying opportunity next month. For silver, it's a little bit of a flattish month. Yeah, March is not going to be that good for silver. Let's see. Sentiment for gold miners is now neutral. So it could go up, it could go down. Currency in circulation not rising, so that's why stocks are now starting to move down. I think it can go down 20% from here. So I would not be in stocks right now, but in gold. Gold is going to go higher based on that chart. The 30 to 10 year ratio is also starting to move up. This is positive. If this starts to accelerate, then gold can go to 3,000, 4,000. Yeah, this looks very bullish. This is the second derivative. It's above 0. Debt to GDP, we are still at the debt ceiling. It has not pierced the debt ceiling yet. So if they increase the debt ceiling, then gold will start to rise. We will see. They still have some money in the pocket, but once that's gone, then they need to increase the debt ceiling. There was some defense spending, but on European side. So that could also be bullish gold, but in Europe. This is a new chart that's very important. We want to buy gold when this is negative. Now it has gone back negative, this near-term forward spread, which means we are refueling to go much higher in gold. So if this starts moving up again, then gold will go to 4,000. So we're going up and then down, and then now up. It can go back up, and then this will go like this at 1200 going to 1800. That's 50% upside. So if you do 50% here, that would be 4,500. So keep that in mind. 4,500 is coming in the coming years. It might look ridiculous, but it will come. You just need to wait a bit. Then we have the rate cuts. I do think we are starting to get rate cuts. You can see here the 2-year yield is starting to move down. That means there are problems in the economy. You can see GDP is dropping or starting to drop. Atlanta Fed GDP minus 3%. So rate cuts are coming. That's good for gold. Foreign deposits have not increased lately. That's not that bullish. Some are bullish, some are bearish. Yeah, the borrow fee has gone back down to 0, so that pressure is also off. But yeah, if it goes down, typically then the move starts upwards, right? Because we had a spike and then the move comes after the spike. So now it's back down, so that means now is the time to get above 3,000, right? But okay, borrowing fees have gone back down to 0. Gold futures curve looks very good. It's 3,000 to 4,000, now 3,500. Silver futures curve, same, will be going up. The VIX is still low. If this spikes, then stocks will go down and gold will go up. The fundamental value, it's pretty at 0 now. So from a fundamental value perspective, we are at 0. Won't go up or down, but I think it will keep on rising. This import loss chart on silver, I was bearish on silver, still bearish on silver because of unemployment going up, etc. But since gold will pierce 3,000, then it will drag silver up, of course. But I would be more in gold than in silver, so that's just me. DXY, very important. We have seen a major decline in the dollar from 110 to 104, so 5%, and I think it will go to minus 10%, so back to 100 on the DXY. So that correlates with 50% upside. So you could get a 50% upside in gold, as I said, going to 4,500 from the current 3,000. And this is a new chart. I really like this one. This is a log chart, and it's coming from Yardeni. So it's not just someone on X, but it's Yardeni Research. They are thinking that gold will go to 4,000 by the end of the year and 5,000 in 2026. So this is the same target as Nomi Prince. They both say 4,000 and 5,000. That goes together with a 50% upside from 3,000 to here. So that's a 50% upside, as I said. We are going to pierce 3,000 soon. And by the end of the year, we are at 4,000. So keep that in mind. 4,000, 5,000 is coming. What does this mean to gold miners? But before we talk about that, some other data. Okay, central banks are still doing QT, as you can see here, until they can't do QT anymore. When the money is gone, then they will start QE again. Let's see how much money they still have. You can look at the Treasury General account, which is this here, the purple line, and it's still full, but it's starting to decline now. And when it is back at 0, then they will need to do QE. Okay, and that's when the dollar will probably fall because they're doing QE. And it's already falling. So everyone is now fleeing the US stock market, fleeing the dollar, and getting into gold. And now the most fun chart, the deficit. We had a huge deficit. In January, so you can see it's crashing. Oh, this is very nice. Look at this. That's due to the tariffs and imports that they're doing. Not so much for the services, but it's mostly goods. So it's the goods balance deficit that is widening. Look at this. Widening deficits. And it's not really getting any better, as you can see from this line here. It's getting worse. So a lot of deficits will still come. Import price to export price still in deficit territory. Commodities rising, so inflation prices are rising still. That's good for gold. Yeah, this is quarterly. Yeah, look at this. There is a correlation between the deficit and the US dollar. Okay. If deficits widen like this, the US dollar needs to come down. That is the correlation. If you have deficits, your currency will go down. And we are seeing that right now. It's already at 104. This will go below 100 very soon. US dollar is extremely overvalued right now. Capacity utilization, let's see. What is the capacity utilization for? Went up a bit. Okay, so yeah, probably good for inflation. Money supply is going up. That's good for gold. Onto some posts. Let's start with oil. So this is a chart that I pasted together. You can see, yeah, oil is undervalued compared to inventories currently. So we might have a bounce back to maybe 70, but you can see that oil price is starting to decline, and I think that's due to the recession that is coming. But when you look at the zero line here, that's a neutral price of oil. So I have found a way to calculate the neutral price of oil via this chart, and it's basically always around 70. So don't expect 100 or 120 oil. That's never going to happen. We had it here, but that's overvaluation. So it went back down to 0, and then you're back to 70. So 70 is a normal price for oil. Probably 60 when we have a recession, then we can actually get to 50 even. But I think it's going to be around 60. Okay. So forget about oil. I'm only invested in gold. Also, this chart, Brave, Better, Skelly leading index of 490 leading indicators. So that's the red line. That's the leading index. It's going down. And I guess in the coming months, it's going negative. So when that happens negative, then you still have 5 months to get out of the stock market, because then it's going to crash. Same here, but this is a slower crash than this went down. Here, negative, and then we get a crash. So watch out for stocks. It's completely overvalued right now, so don't even try to buy these stocks. GDP is going negative. Yeah, some of this is imports, I know, but it's not looking that great to be in stocks. Free cash flow is at all-time lows for the stock market. So why on earth would you buy it? I get 50% free cash flow for gold miners, not 3%. Commodity outlook, I think I talked about this, but avoid alumina, iron ore, and these commodities, coal. Get into silver, not uranium. Lithium, maybe, it's bottoming out. Copper, yes, it's going up. Platinum, actually, I'm starting to become bullish because the rhodium has started to rise. Gold is good. I wouldn't buy these two here. So that's the commodity outlook. 8,000 gold. Peter Schiff says 8,000 gold, and that's via these lines going up. I think 4,500 in the coming 2 years, and then yeah, maybe we can get to 8,000. That's a possibility. So these are the gold lease rate spikes. It's gone down back to 0.5 now. So, but now the fun starts. Once it goes down, then gold is starting to move up, as you have seen in the previous charts. There was some news on USGS silver reserves. You can see here silver reserves hit a new all-time high. So there's plenty of silver in this world, but you need to get it out of the ground, of course. So production is important for the silver price, but it's not like we are going to get depleted of silver. There's plenty of silver in this world. Mostly coming from Poland, Peru, those Argentina, Russia, so plenty of silver. This was also news. Chinese insurers are going to buy gold now. Yes, that will push up the gold price. From my calculations, it will go up 30% if they have inflows of $50 billion. 30%, yes, that goes to 4,000 then, so 3,000 to 4,000. Everything is pointing up on gold. Just wanted to show this as well. So this was a linear chart on a log scale, but if you put a normal chart on that, then it's an exponential chart. And you can see here from the gold premiums, you can see that the neutral gold price is this here, and it's an exponential chart. So when are we getting to 4,000? Somewhere here. This is 4,000. So what is this? This is 1 year, 2 years. So yeah, by the end of this year, we should be at 4,000. And then by the end of next year, 5,000. This is the evidence. The neutral price of gold is rising parabolically. Can this trend reverse? I don't know. It can, but the trend is your friend, and it's going to 4,000 and 5,000. Okay, so let's end with this nice dragon, the gold oil dragon. Gold keeps on rising and oil keeps on dropping. We are already at 65 oil now, and gold is probably 3,000. So this is pretty good for miners. So let's take a look at where the miners are right now. You can see there's plenty of upsides in these miners here. For example, yeah, Soma Gold is currently at 170% upside. You have things like Swabi Gold has dropped a bit. It's still above 100% upside. A double 100 mining also doubles. So plenty of miners that you can buy. Some mid caps here, 50% upside. Step Gold has one of the highest upsides, 3x. So yeah, it's looking good. If gold goes to, let's say, 4,000, as I said, there are going to be a lot of multi-baggers here. 5 baggers, yeah, mostly all 5 baggers. And Yardeni said we could even get to 5,000 in 2 years. So 6-7 baggers are coming. Okay, so this is the update, and I'll see you next video.